Tuesday, the 22nd of September. Welcome everyone to the show, Frontier Opening Bell here on Frontier Africa Report. I am Bosin Omofaye, and with me, Chima Ukadike from Vertiva Capital Management. Good morning, Chima.
Good morning, Bosin.
Thank you. And Ayodeji Ebo, who is an investment professional, is also joining us on the program this morning. Ayodeji, thank you so much. I appreciate your being on the program all the time.
Yeah, thank you for having me.
Great. It looks like a very nasty Monday for the global stock markets. Nigerian markets managed to soft land 0.01%. South Africa, which is the biggest exchange on the continent, took a very hard beating, 2.48%. The Kenyan market was down by the same margin as much as the Egyptian stock market and the BRVM in Ivory Coast. Just a very negative day around the world to start the week. But let's move on to the regional markets. By the way, in Kenya, the insurance broker Underwriting Africa Limited is being investigated over cases of missing premium. 11.8 million Kenyan shillings was the amount. The authorities are investigating that. In terms of the revenue, the Kenya Revenue Authority says tax collections went down 18% to about 93.5 billion shillings in the month of August. Again, the lockdown and businesses that are just trying to recover and a little bit of a reopening from those lockdown by the authorities. Vodacom Tanzania is paying per share cash dividend of 178.57 Tanzanian shillings. And Charles Robertson, who is the chief economist at Renaissance Capital, says non-oil economies in sub-Saharan Africa will show the best growth globally in the year 2020. Chima, let me ask you about these non-oil economies. What's your take on the growth that you think we should expect?
Well, so for many non-oil economies, we've seen them, I think we have seen them thrive better than the oil economies, the oil-dependent economies, like we would expect, given all that has happened to those economies. So I think that they are better poised for, although the pandemic has affected everyone in varying levels, I think that they are better poised for a sort of recovery that we may see going into the next year, given the fact that they do not depend a lot on the volatilities that happen in the oil sector. This next year will be a test of many countries' creativities, depending on how they're able to bounce back in terms of tourism. For many that are dependent on tourism and services and manufacturing and all that. So I believe the non-oil economies are a bit more poised to take advantage of the recovery that is set to happen in 2021.
That'll be interesting, Ayodeji.
Hello? Yes.
Yes.
Sorry, I missed that, yeah.
Yes, the non-oil economy that are being set in Africa will be most likely the best to recover much better than the hydrocarbon economies such as Nigeria, heavily dependent Angola as well.
Yes, I totally agree. And we, continued for most of these oil economies. Like I always say, you don't have your destiny in your hands. It's always on the back of whatever happens to oil that determines how your economy will grow. We've seen it times without number. Yes, COVID might have impacted this year, but we don't know. There are a lot of factors that can influence the oil prices and would impact on the revenue. So for the non-oil, you would even see for some that have other commodities that are based. If you look at it, for instance, gold and some of the other commodities, they were a bit defensive even within this period. Yes, the demand for them reduced, but not as much as we saw for oil. So it's high time for most of these countries for them to look at avenues where they want to diversify. So bringing this back home for Nigeria, for instance, we need to be very more deliberate about the diversification and not just on policy, having white paper policy or committees on the diversification. We need to take that whole step to see how we want to grow the economy. So even if we can't, if we can't earn even those revenues, why can't we just look at those things that we know we import significantly, look at the demand for FX and see how we want to be taking them down, reducing that demand for FX one after the other. With that, would see that would indirectly diversify our revenue, our economy.
Okay, I get it. So instead of the whole framework, white paper, policies being talk about diversification, look at our import items, take one or take each of the items and begin to deal with it. Yeah. I think on a sustainable basis, if we do that, we will just clear up the whole thing. I think it's a very simple way of doing things, by the way. If you take tomato, for example, or you take rice, or you take wheat, or you take any other item, or fish, for example, or frozen food, for example, once you clear up that list of your imports, I think you've just done your diversification, technically speaking.
Yes, I totally agree with that. You've done, but beyond even the diversification that you're talking about, the major impact that we would also see is the jobs that would create. And when you look at the relation between job and insecurity, once we're able to create more jobs, there'll be the insecurity level would also improve. And as before you know it, we'll be able to attract even more companies, more FDIs into the economy. So we believe sometimes we look at the solution always looks so straightforward, and government should not try to see that they want to solve it. They should focus more on the policy and the enabling environment. The private sector would be happy to fund whatever initiative based on the policy and the comfort that they have on some of those policies that they would introduce. You spoke about tomatoes, for instance. They can look at the value chain. Is it there when you look at, based on statistics, the more than 50 or 60% of what is produced is wasted because we can't preserve. So can we undo that value chain? Can we get those that will be willing to invest within that value chain to preserve and also add value to it? So we won't have to be importing tin tomatoes and stuff like that have been processed. That would reduce the demand for FX, and we are also creating jobs here rather than most of our policies are creating jobs for outside the country than creating jobs at all.
Okay, thank you. Today is a big day for Nigeria when it comes to the Monetary Policy Committee. So let's talk about West Africa. Of course, yesterday we hosted Nana Akufo-Addo, the Ghanaian president, and the Secretary General of the EFCFTA Secretariat, Wamkele Mene. It's all about how to get EFCFTA up and running and ahead of January next year's deadline. Then, of course, Nigeria's ratification of that document. Central banks around the world now have to adjust around the US Fed, the 3-year interest rates, hate horse that was disclosed last week until 2023. Consensus today that inflation and sluggish growth will tie the hands of the central bank from raising interest rates or cutting it. Heineken's reportedly buys additional 144,000 odd shares of Nigerian breweries to increase its capital. And in Congo, BGFI Capital is raising about 300 billion CFA franc to help Congo clear up part of its debt. And Chad is in a very unusual relationship arrangement with Glencore to suspend $100 million, which Glencore would have paid for Chad and for its oil for cash loan. It's a different arrangement. Every authorities or countries are trying to find a way to soft land from the debt level that we're looking at and the interest payments on it thereof. Chima, let's touch on with Heineken and Nigerian breweries.
This news about Heineken purchasing additional units in Nigerian breweries has been on for a while. I think going over the past 2 to 3 months, they've been purchasing additional units from Nigerian breweries. I think that, well, it may just be posturing, but I think that the company is really just trying to take advantage of the low prices that the stock has seen over the years. So Nigerian breweries is one stock that has really fallen from a very high peak down to was almost around 20 or 30, low 30s about some 3 months ago. And I think it is quite a resilient stock, especially given what has happened during the pandemic, during the peak of the pandemic, which was Q2. Although the company performed poorly in terms of revenue and in terms of PAT, given what had happened to the brewery sector. But I think it was the best performing brewery stock when you compare it to Guinness and to international breweries. And when you compare that performance to what many analysts were expecting, myself included, I think it was a quite decent performance. So I think Nigerian breweries is one stock that has proved to be resilient, and the low pricing that it had gotten to had been sort of an incentive for investors to take advantage. And I think that is what Heineken, the parent company, has been trying to do, just take advantage of low prices. It might also be as a sort of representation of the firm to investors. If we are comfortable enough with this stock, we think that, and we're buying it, and we think that is a good stock for you to buy as well. So that's what I think about the increased purchasing.
In terms of MPC meeting today, Chima.
Oh, okay, true. So like your headline says, the increased inflation will tie into. I think it will really constrain the MPC from reducing rates. Like according to the last MPC meeting that was held, I know 8 members voted to hold, while 2 members voted to reduce. I don't think that we'll still be seeing anybody. Well, I don't think anybody would really want to be reducing at this time anymore. Given that inflation is at 13.22%. While we have the MPR at 12.5%, we're already performing, interest rates wise, already performing worse than inflation level, which is not where we want to be at. It doesn't send a good message to investors, foreign or local alike. So I think that the MPC would likely hold the MPR as well this meeting, although it's currently at a dilemma. Should it lower rates so that it can help to send a good signal to investors that want to borrow to grow the economy, since it is needing to help improve economic growth? Or would it, if it does that, it is stuck with allowing interest rates to be way below, to be struggling with inflation? So I think that it's at a dilemma. However, I think that it will grow with sending a positive signal to investors.
Interesting scenario. What's your take? GDP growth minus 6.10%, interest rate about 13.5, inflation at 13.22. It looks like Chima spoke about a dilemma. It looks like a trilemma here.
Yes, so really a trilemma, and you've seen the MPR over time has become ineffective. So it's not even about moving the MPR that really matters, even for CBN itself, and they've used other monetary policy tools to adjust interest rates in the past. So the MPR has been rendered more redundant, I would say that. But there's also a limit to what even the MPC can do. The fiscal authorities on their own, they have to play a major role. CBN has set up almost several funds to support different sectors, and we feel, yes, they've done their best, but when you also come back to their main objective, price stability, you would see that for that, I think they are not much in control of that now. We can see what FX is saying, even in terms of liquidity and also with the rates. And you can also see for inflation, which is also one of their focus, inflation continue to increase and would continue based on the parameters, devaluation, fuel, petrol price. You also look at which will also filter into transportation, and you would see that all those factors continue to pressure. The electricity tariff is also there to pressure inflation, which will remain very high. So, and CBN is of the view that with the lower interest rate environment, people are beginning to channel more funds into the real sector. So we believe that they will still like to maintain status quo while they try to see how they want to maybe employ more association to see how banks can increase their lending to the real sector. We're seeing a lot of structured products now in the market. People are, for the corporates, are able to raise funds at very attractive rates, which the CBN feels that is a plus. But, you know, on the they need to be a balance. So if we look at for the investors, especially for long-term investors, the negative return is not something that sounds very interesting. But I believe that if this policy or this low interest rates is sustained for long, and we can get, if there's a bit of confidence around the FX, I believe that would see in the long term there will need to be a change of strategy for even the portfolio managers, because we can see the alternative assets, yes, they have their inherent risk, but that can also help bridge that gap between inflation and the return to a large extent. So we there's the elephant in the room for the MPC. It's majorly the FX and the negative growth, but they'll want to just advise the government to accelerate the implementation of policies, and also maybe provide some form of assurance around improving liquidity of the FX, and maybe also to see how they want to encourage foreign direct investment that can also support.
We'll talk about fiscal stimulus. Just one quick minute, Chima. When we talk about fiscal stimulus, what sectors do you think this fiscal stimulus should go to get growth and generate this much export that we can get some FX inflows from? What sectors would you consider very quickly?
For me, I would say well, we already have some stimulus in some policies favoring the agricultural sector. Although we've hardly seen significant results from there, although the agricultural sector was one sector that was positive, that had positive growth from the last GDP numbers. So something is working, maybe not as much as we would like for it to work, but something is really happening there. I'd also say for the manufacturing sector, it's something that we really need to look at so that we can grow exports considerably. I know Ayodele talked about FX stability, FX rates, and that is one way. That is the simplest way to guarantee such stability. Once your exports are are higher than your imports, your goods are demanded, and you can be able to see that your rates, your exchange rates are becoming more stable, or as much as you like. So I would talk about the manufacturing sector. If we can have more policies that would help MSMEs and even medium to large scale enterprises that are involved in manufacturing activities. When you look at our imports, we'll see that you guys talk about food, about banning, about trying to restrict sort of FX for food imports so that we can help to manage the liquidity of FX. But if you look at the import statistics, I think about less than 10% of our imports are food imports. We import a lot more from for the manufacturing sector and other activities. So I think that if we can grow the manufacturing sector so that we can produce many of these goods that we import, we'll be able to favorably tilt the balance of trade in our favor. Also, we can look at services sector. With the remote working available now, a lot of possibilities have been opened. A lot of people can now export their services right from Nigeria where they are. So for me, the three sectors I'll be looking at are agriculture, manufacturing, and services.
Thank you. Very profound. Thank you so much, Chima. Let's check in with the Southern African market very quickly. Not a particularly good Monday for the GSE and the RAND. We spoke about that earlier. The RAND, even this morning, still heading south around 16.9. But on the Securities Exchange was where Satrix lists additional 400,000 securities at about 54.98 Rand per security. Invest ETF also lists additional 650,000 platinum debenture at about 158.3750 on the GSE. That's quite additional in the derivatives market. So the Satrix Investec ETF, very large derivatives market in South Africa on the GSE. AngloGold Ashanti has trimmed and restates its 2020 production guidance in terms of what the outlook is for the rest of the year. Botswana Flow Energy reports $12.9 million loss for full year for the period ended June. And in Zimbabwe, schools are reopening, easing of the lockdown, but the teacher says they're not going to work because they want $250 per month as salary and not $1 being offered by the government. Look at the derivatives markets, IODG, for a second. When you look at our own derivatives markets in Nigeria, you compare with South Africa, the ETFs and all of that. I'm sure Vetiva has one or two ETFs on the Nigerian market listed. Ayo, what's your take on that?
Yeah, I think part of the major drag for us is more investor education. So for most of the investors who will tell you that even the plain vanilla investment that they are buying into the equity, some of them are losing money. They really don't understand how it works. So for you to now introduce derivatives to them, for some of them don't really believe much into that because they can't see through how it performs. But we've seen the ETF gold. It's performed very well. So a lot of investors are now using it to hedge because that's more of when you check the underlying assets, it's more foreign based or is dollarized. So for most investors are using that to hedge. But I know over time we'll get to that level. Even for the fund managers, they also, when you have the PFAs, how much of investment do they have in ETF? Do they really believe in ETF? So if you don't get for most of those major players in the markets to buy into that, to believe that it works, and it even ties with even their own model of passive investment. For most ETFs, you see that tracks the indices, and for them, it's also it can be a form of diversification, reduce their stress of trying to rebalance portfolios. And so there's still a long way to go for Nigeria before we can catch up with that. So I believe the major thing to do to improve that is investor education. But maybe Chiba too will want to chip in because she's directly. They have the ETF on their hand. How is it performing and why are we not seeing volumes in these markets?
I agree with you. I agree with you that the ETFs are a great way to diversify and to be able to spread your losses. You're not exposed too strongly to one particular stock, and you're able to make gain from other stocks. Cover losses from other stocks. But I agree with you that is a very good investment. But I think the way we've been seeing that a lot of investors have been kind of reluctant to focus on the equity market because returns are not stable, it's not certain. I think that is what is really affecting derivatives market, and the fact that many people do not really understand the ETFs market as much. I think understanding is one critical challenge that has faced the ETFs market as well. I think when that is, if with the continuous marketing of these products, I think we should be able to see lot volumes that you talked about.
But Chima, you just took that straight out of my mind. Marketing. I think we don't do much yet about marketing our ETFs, and maybe those who are the issuers within the Nigeria space, including the Nigerian Stock Exchange and FMDQ that has a few of these, should promote more of derivatives to the market. I know a lot of Nigerians are doing Bitcoins, they're doing a whole lot of blockchain, they're doing a whole lot around online FX trading and what have you. So it shouldn't be difficult to get investors or local guys to participate in ETF gold, for example, looking at that the underlying asset is gold, about $2,000 per ounce. So if we market it, and I know Nigerians will definitely want to say, look, what are you selling? I want to know more about it. So I think we spend many years and decades marketing equities, as it were, as we call it, plain vanilla. I think it is time for us to also give the same push to index funds and ETFs and all of that. Let's think about it. I think we can push something together moving forward. On a final note, with the North African markets, the Libyan authorities, they I think they're getting their acts together to get oil production back up and running. That'll be good news for this troubled region since the ouster of Muammar Gaddafi. Egypt is signing 8 gas exploration contracts worth about $930 million US in 15 months to continue digging into the hydrocarbon industry. Morocco's Securities Exchange Commission, or the CMA, has announced compulsory takeover bid of 264,414 shares of a company known as S2M. HPS Morocco is reporting half-year numbers increase of 3.4% in revenue to 361 Morocco's dirham. That's about it for the North African space. So let me just give Chima just about 30 seconds to give us your take on today's trading day, or whichever way the central bank decides.
I still think that the markets will trade mixed. Like we saw yesterday, we saw that the ASI was just one bit up in the positive region. I still think that not a lot has really changed. Like I think the MPC will decide to hold. When they decide to hold, the market, the investors will probably just continue as business as usual and just try to bargain hunt here and there and profit take here and there. So I think that's what we'll see today.
Adeji, from an investment banking fixed income point of view?
Yeah, I believe that based on expectation that nothing will change, so we don't expect any major reaction in the market. So most people are focused on the bond auction that will be happening later this month.
Okay. Thank you so much. Let's leave it there for today. Thank you so much, Adeji Abo, investment professional, joining us on the show, and Chima Okadike, the consumer goods analyst at Vertiva Capital Management. Good morning, everyone. Thank you so much for being here today. We'll see you again next time.